Hi, everyone. Thanks for joining us and thanks for the interest in knowing more about the Venezuelan situation and the Venezuelan dynamic. And thanks to the Pacific Council to giving us this space and for keeping the Venezuelan conversation alive in the multi-dimension and the multi-layer capacity and complexity that Venezuela has. Since January the 3rd, Venezuela has entered in a different era. January the 3rd marked a major change in the Venezuelan situation and in the U.S. relation with the Venezuelan authorities and with the political dynamics within the country. I think that after January the 3rd, Venezuelans are hopeful about the three phases that the U.S. government has laid out as a plan: the stabilization, the recovery, and the transition. Mostly, the Venezuelan hope is on the transitional part of this process, but we understand that in order to reach that part of the three phases plan, we need to go through a stabilization and recovery. This USG plan that has been laid out, it's right now ending the first phase. That was a stabilization phase that started after January the 3rd. And now we are entering into the recovery phase. And in this recovery phase, there's a lot of ongoing discussion regarding Venezuelan debt, Venezuelan energy market, Venezuelan investment opportunities, Venezuelan rare minerals. There's a whole different conversation to what Venezuela was used to in the months before. And also with that it brings a lot of complexities and new things to take care and to have on the radar and to take into consideration to take decisions. Today, we will talk about this and all the dynamics on the economy and the energy in Venezuela, and also what to do in macroeconomics, debt restructuring, and the future of Venezuelan finances with three experts. We have with us Gustavo Garcia. Gustavo is a Venezuelan economist specializing in macroeconomics, fiscal policy, and public finance in Latin America. He's currently the coordinator of the economical team of María Corina Machado and the Venezuelan political leadership and the democratic forces. He previously was had the position of the principal technical lead on fiscal economy and the Inter-American Development Bank, where he worked on fiscal reforms and public sector modernization initiative across the region. He has also served as an economist in the IMF and had held the senior economic policy positions within the Venezuelan government in the democratic times. We also have with us Mariana Parraga. Mariana is a Venezuelan journalist and Reuters energy correspondent based in Houston, Texas. She specializes in Latin America and oil markets and is internationally recognized for her coverage on Venezuela energy sector. With nearly 2 decades of experience in economic and energy journalism, she has reported extensively on Petróleos de Venezuela, international sanctions, crude exports, and the geopolitical dynamics shaping the regional energy markets. And before joining Reuters, she worked for leading Venezuelan newspapers, including El Nacional and El Universal. And also, we have with us Francisco Monaldi, who is the lead expert of for political economy of energy in Latin America and serves as director of Latin America Energy Program at the Rice University Baker's Institute for Public Policy. His work focuses on oil markets, energy policy, natural resources governance, and the economical challenge facing energy producing countries. Over the course of his career, he has held academic and research appointments at institutions including Harvard University, Stanford University, Columbia University, and the Hoover Institution. And he has also advised international organizations, governments, and major energy companies, including the IMF, the World Bank, and all their multilateral bodies too. So, with these three experts, we're going to start the conversation today. Thanks for being with us. We're going to start with Francisco, and then we will go with Mariana and Gustavo. Francisco, for the audience here today that is interested in the Venezuelan situation, I think it's important to understand the current state of the industry, and well. how the production has worked in Venezuela in the recent years, and what will be a realistic oil production target for Venezuela in the years to come, and which kind of reforms and decisions are needed for this to work. Francisco, the floor is yours, and welcome for the tonight.
Sure. Thank you very much, Miguel. It's a pleasure to share with you, Gustavo and Mariana, people that I really respect and good friends. I think it's important first to put two general big picture elements on the table. First, that Venezuela used to be, of course, one of the largest oil producers in the world. It was the largest oil exporter from the late 20s to the late 60s. And the industry went later into decline, but then it recovered during the apertura in the 1990s. And by the time Hugo Chavez got into power, it was at almost peak production again. And of course, the price of oil skyrocketed, and the apertura added 1.1 million barrels of production capacity. But then the industry has been in decline for the last quarter century, a combination of politicization of the national oil company with the over extraction of resources from the sector, expropriation of the companies operating in the sector, Exxon and Conoco leaving, and a lot of contract reneging and conditions that didn't make attractive for the companies to invest, and eventually U.S. sanctions. All that led to a collapse of the oil industry that has been in the last few years. There has been a little bit of growth because of first reopening the sector. The exports after COVID had shot in some of the production, and then the license to Chevron and some additions to production recently. So today, depending on who you believe, the production is between a little bit north of a million barrels, or according to the government, closer to 1.2 million barrels. But the potential is tremendous, right? Venezuela could, in a sort of counterfactual scenario with no political risk, above ground risk, let's imagine that the oil resources of Venezuela were in Texas. Venezuela could be producing 6 million barrels of oil per day, so almost 6 times. Of course, that's not a realistic possibility because of the limitations that Venezuela would have in terms of institutional, in terms of electricity provision, in terms of human resources, etc. So the plan, the ambitious plan that the Venezuelan opposition has developed is to increase production to, say, about 4 million barrels in a decade, which is achievable, but it requires everything to align politically, institutionally, etc. A more realistic, I think, a scenario taking into account the sort of the political constraint is a little bit lower than 3 million barrels in a decade. I mean, this year we are only going to be adding about 150,000 barrels. Even the government now is talking about 170 from December to December of last year to December of this year. And that reflects the fact that for now, what we're going to see is basically additions in production by the incumbents, basically Chevron, Repsol, and perhaps Morel and Prom in this first year, because a lot of things have to happen yet. First, we just got a new law that reopened the sector and offered a participation in either joint ventures or production sharing agreements. And there are some important improvements in the law, including flexibilization of the tax regime and the possibility of arbitration, etc. But there is a massive discretion by the ministry in terms of fiscal regime, in terms of other elements that could create a lot of uncertainty in the sector. The government is promising that they will fix those things in the reglamento, which is sort of the executive order that regulates the sector and the contracts. But so far, the draft that had been circulating are not reducing those risks. In fact, I think they are actually increasing in some ways. The other, so we need to get first, this reglamento approved. We need the contracts. Then we need a process that so far is completely opaque and non-transparent of how which fields they want to assign and what happens with the existing. Because Desi Rodriguez gave about some 30 PSA contracts calling Venezuela CPPs over the last 2 years to people close to the regime and countries aligned with the government. That was because U.S. sanctions didn't allow them to offer them to other companies. They have argued, but of course we have a very different reality today. So how do we get the proper operators? So about 40% of the production today is in this type of contracts, plus the Russian and Chinese NOC. So you need a big shift in the operation, which are the operators who could get licenses from the US. You need to get the new contracts. You need to get the new rules. And for now, what we're seeing is mostly MOUs being signed, and not the type of contracts that will be required. There are some interesting things happening. Chevron was given a block adjacent to their Petropiar project. Shell is clearly going to move ahead with projects to export gas to Trinidad. And Mariana is going to talk a lot about recent trends, and she's super well informed, so I don't want to take that from her. But we can talk later, Miguel, about the importance of institutions and governance in order to really reduce the above ground risk and get the very significant investments, upwards of $100 billion that Venezuela would require to really have a good recovery of the sector, and also to avoid all this lack of transparency and potential issues of not only corruption, but issues related to the interest of the state in the long term of Venezuela, in terms of having good deals that are beneficial for both parts and that will lead to the prosperity of the country. Thanks.
Thank you, Francisco. And that is the perfect framework or layout to now give the floor to Mariana. Before, I want to say to everyone listening to us that if you have any question or you want to do any comment, please post it in the Q&A, and we are going to include it in the conversation to keep this flowing and keep it dynamic. Mariana, you are probably the best informed person in the world about the Venezuelan oil industry right now, and it's common for people in the academia, or also people who is working closely in this sector, to look for you and to look for the kind of information that you can provide and explain. Right now, how is the output of the production in Venezuela working? Which are the international players that are watching the Venezuelan, the evolution of the Venezuelan energy sector, and how the current state of the industry it's working, and how that is being developed under the new set of conditions. Mariana, the floor is yours.
Thank you, Miguel. Thank you very much, everyone here listening to me, and thank you for the invitation. It's my pleasure to be here talking to you about what I know the most, which is Venezuela in my heart. And I also want to give you some ideas and some perspectives on what's going on, especially with numbers. Taking from what Francisco was explaining to you before, the production and the exports of Venezuela have been recovering. We are starting to see a recovery that is finally surpassing. At some point, it could surpass at the end of the year the sanctions level. And we got to remember that sanctions were imposed for the energy sector in Venezuela in 2019, and then COVID started. So Venezuela had very bad years from 2019 to 2022, and production went below 1 million barrels per day very fast. And it has been struggling since to recover to pre-sanctions level. And we hadn't seen a production capacity going beyond that, which is very important to consider the numbers that Francisco was giving to you before on the oil ministry expectations of end of the year production. By example, they would need to increase production overall, but also production capacity, which is something all the companies are working towards, especially the companies that were already in Venezuela. For example, the companies that are in joint ventures with PDVSA, specifically Chevron, which is the largest or the main partner in Venezuela right now. They're all working, as Francisco was trying to explain before, towards the expansions of the projects they already have there. So we already have some specific projects where people is starting to see specific expansion projects that if they continue working as they are planning, and if they find the rigs, which is a very important situation in Venezuela, we could see a production expansion and a production capacity expansion, which is very important in Venezuela because we are coming from years of having just one active rig or two active rigs the most, which is nothing in Venezuela. Venezuela has a particularity, which is it has a very atomized or a lot of wells, different than, for example, the Middle Eastern production system. And it works through macoyas, which are well clusters. So they do need a lot of rigs for production in Venezuela. And also, we are not even talking about that, but for gas, another situation that it is, we have not been paying attention to gas in very long. We have plentiful resources of non-associated gas that are waiting for investors to be developed. And Venezuela has only been producing associated gas in recent decades. So overall, Venezuela is trying to go to pre-sanctions levels. That's what the ministry has, the message the ministry has been repeating over and over. And as Francisco said, the goal for the end of the year is 1.37 million barrels per day of production. So we're now around 1.2 million barrels per day. The average of the first quarter was 1.01 million barrels per day as self-reported figures to OPEC. And a note here important is that the discrepancy between self-reporting numbers and the independent numbers is getting eased. So we no longer have such a gap between non-official figures and unofficial figures, fortunately. That to be said, we don't have a fluid information coming from the ministry, which is a pity. So we do have to be paying attention to what they say from time to time on numbers. But the differentiation we had before that was beyond 300,000 barrels per day gap between official numbers and independent numbers is no longer the case. So we are closer in the figures. So I would pay attention. I would be paying attention to the figures, official figures, if I were an investor. The oil ministry is saying they are expecting to have 1.37 million barrels per day of production by the end of the year. And that would give us an average for the year of 1.2 million barrels per day, which is, I think it is achievable. Actually, for some of the goals they have set for this year, they are already surpassing the numbers. So I'm going to talk about exports, for example. They exported 1.25 million barrels per day. That includes crude and fuel in the month of May. And in the month of April, it was already 1.2 million barrels per day, which is a number that we hadn't seen in very long, maybe since 2019, 2018, end of 2018. So the goal they have set for exports for as an average for 2026, I'm talking about official goals, is 1.1 million barrels per day. And we already surpassed that number since April. So I do think they will have to come with better estimates, which I think were drafted at the beginning of the year and haven't been updated in recent months. Because I do think that if they continue working with the traders, which is something I'm going to explain to you later, they have the potential for expanding exports and draining the inventories that were accumulated in Venezuela since December, particularly because of the blockade that the U.S. imposed, trying to stop sanctioned vessels from going out of Venezuelan waters. They accumulated over 40 million barrels of crude and fuel oil in tankers and in onshore tanks in Venezuela, and they have continued draining those inventories. So I made a calculation for you to have an idea, because of course you're going to have the question that if they are producing about 1.2 million barrels per day, how is it that they're exporting more than that? And the answer, are two easy answers for that. The first one is that we're talking about gross numbers, and Venezuela is also importing diluents, which are about 150,000 barrels per day. So that makes into those diluents being re-exported as portion of the blends Venezuela produces and exports. So, for example, the María blend is a blend that they have been building with Venezuelan crude, but also they have been using some imported stuff for that. And they have something called diluted crude oil, which is made of Venezuelan extra heavy oil and heavy naphtha imported. So you gotta see a portion of those barrels that they're importing as diluents re-exported. So that makes into the account, right? And then there's another reality, which is, Venezuela still has a portion of inventories undrained. So Venezuela still has, by example, María crude stored in vessels that are being used as floating storage, and they still have to drain a lot of fuel oil that they were struggling even to store between December and January because they were overproducing that fuel oil and they didn't have a buyer for those barrels. So I will say that in the coming 90 to 120 days, so 3 months to 4 months, they will continue draining those inventories that were accumulated between end of 2025 and beginning of 2026. So we're going to continue seeing exports overpassing or surpassing the level of production they are reporting. But that's quite normal. Actually, they have been going faster than expected. They are including now more traders to the pool of traders that were working with them at the beginning, which were only two, Vitol and Trafigura. And now they have started including smaller players as well. We are seeing, by example, U.S. refiners interested in having direct contracts with the Venezuelan administration. So at some point, by example, refiners that are large, heavy crude refiners like Valero, Phillips 66, I am expecting them to try to get contracts directly with PDVSA. And we already saw the first of those contracts directly with PDVSA last couple of months ago, because Reliance, which is a very large Indian refiner, resume operations with Venezuela. They had before a very long-standing supply agreement with PDVSA, and they got to resume imports of Venezuelan crude through that previous agreement they had with Venezuela. And now we are seeing India finally emerging as the second largest receiver of Venezuelan crude because of that particular contract. Actually, right now, the interim president Rodriguez is in India, and we're expecting them to negotiate maybe even larger exports of Venezuelan crude to India. And at some point, of course, Venezuela would have to deal with the reality of what to do with China, which of course was the largest receiver of Venezuelan oil before the capture of President Maduro, because of course the U.S. cannot absorb it all. So by the time there's calculations of the U.S. being able to absorb over the time, not immediately, but over the time, around 1 million barrels per day of Venezuelan crude. So once Venezuela surpasses those levels, of course, we got to wonder India and who else is going to refine those barrels. So China got to be in the mix at some point. It's not in the mix right now. The U.S. administration is actually stopping China from getting into any negotiation at all. But that might be a need in the future that even the U.S. is going to say, well, if we are continue growing exports, the only way to grow exports is to find another destination. And the obvious destination is going to be China. I think I'm going to stop here, Miguel, and you can tell me if you want any more from me later.
No, thank you, Mariana. We will go back in the second round with you because there's a lot of questions being posed by the audience about the joint ventures of China and how China it's involved right now. And this comment that you said at the end is a good way to frame the second round and start answering those. But right now we're going now to Gustavo. As I said in the beginning, Gustavo has an important and at the same time pretty complex role. That is that Gustavo is working for the economy of the future and is trying to design the reforms and the decisions that are going to shape the transitional and post-transitional Venezuela. And in that context, Gustavo, first, what do you believe are the institutional reforms that are indispensable to restore the confidence of the international investors in Venezuela? And right now, attached to that, Venezuela is facing a debt, a public debt that is around 180% of the GDP in the most conservative calculations. How can this issue be addressed without compromising the country's social recovery? And I add to that something that came from the audience regarding the debt. That is how the China part of the debt also plays a role in the restructuring process. So, Gustavo, thanks for being here. The floor is yours.
Thank you very much, Miguel, and thank you to the Pacific Council for inviting me to chair this panel with two good friends that are very competent, and it's difficult to add something more specific to the oil sector situation after Francisco and Mariana's speeches. But let me tell you something. I'm going just to insist on the institutional reform in my very first part, because we have to see the general context that concern investors in Venezuela. First is the rule of law, and that includes a very clear, transparent legal framework and institutional framework that are not present at this current moment in Venezuela. Second, we have not an independent judicial system, which is critical for investors in order to bring any litigation when there is any difference between the government and those investors. The judicial system in Venezuela is also highly politicized. And then, as an alternative to that, you usually offers international arbitration for those companies, for those investors. And that means that there are 3 international courts of arbitration. That is not very clear in the law. Nobody will be confident in recurring to an arbitration in Venezuela, domestic arbitration, with a very high authoritarian and influential government in any economic decision. So it has to be very clear stated in the legal framework that when there is any difference in legal terms, you have the right to go to any of the 3 international courts of arbitration that are very well known in the world. And there is also an issue, a very important element that we contemplate in our government. Those courts of arbitrations are very slow, and some of the decisions that they usually take is very discretionary in terms of the arbitration tribunal that confront that situation. For example, what are the overdue interest payment that is going to be accrued? What is the compensation for the legal expenditure that you incur? Each tribunal will set its rule. And we think that that's one of the reasons, even with international arbitration, some investors say, well, it will take several years for me to be compensated if it's any difference at all. And we plan to do something, according to the experience on those international courts, that accelerate everything when you have bilateral investment protection agreements with the main countries where investors belong. Because when you have those bilateral agreements and that bilateral agreements are violated, that accelerates everything in the course of arbitration. And second, to incorporate the language of those bilateral agreement for protecting investment that is set in the contract with every investor if the country has an agreement with Venezuela. That will send a signal that the rules are very clear and could be more expeditious instead of taking several years in order to solve the problem. There is one case in Venezuela that was resolved in one of the international courts very fast because it was the country has a bilateral agreement with Venezuela at that time. It was Canada. I'm not going to go into those details, but the lesson that we extracted from that is that those bilateral investment agreements to protect investors are very critical, and to put that language into the individual contract with each investor in Venezuela. And the other thing is that the law, whether hydrocarbon or electricity or whatever, has to be non-discretionary. And the problem is that the hydrocarbon sector law is fully discretionary, and you depends on the agreement that you get in a private room with the president of PDVSA, if you are a mixed company, or with the Minister of Hydrocarbon. That could be changed later on, and has been the practice of this regime, that any change of the minister or the president of PDVSA, the new one pretends to change the rules. That is not really a secure base in order to have the confidence of investors to go and invest in Venezuela very rapidly. So those are very rare. The most critical one, given the track of Venezuela in the last 2 decades, is that the government take the fiscal regime that will prevail in those contracts is underdetermined in the hydrocarbon sector law. Because, as you know, the royalty could be from 0 to 30%. The integrated overall tax, which is another royalty, could be from 0 to 20%. And it says that the income tax could be reduced, although that is not contemplated in the income tax law, where the corporate income tax is defined in the corporate law. That could be appealed for anybody in order to say, no, we cannot reduce 50%, or create arbitrarily, again, very discretionary incentive in order to reduce the effective corporate income tax in the hydrocarbon sector law. And the electricity sector law that was just approved 1 or 2 days ago is even more discretionary. And if you don't recover electricity relatively soon, the production of oil is not going to pick up significantly in the years to come. So there are a lot of inconsistency in the legal framework, in the institutional framework, that have to be overcome in order that investment pick up in the way that Francisco mentioned. All the risk is above the ground. Everybody knows in Venezuela the level of international reserves that are explorable according to the technology available, even for the extra heavy oil. Everybody knows the quality of oil for any field all around Venezuela. There is no any mystery on that. We don't need to do exploration expenditure for several years because the oil is down there. There could be very attractive projects for exploration in the outside offshore investment, and in certain areas of Venezuela that could go even deeper because the technology now is more assertive in order to do those exploration. But it's not the risk in the oil, it's not the risk below the ground, it's all above the ground. And for that reason, if that institutional, a legal framework is not adjusted. And there is another problem that we have in Venezuela. Mrs. Rodriguez, Delcy Rodriguez, replaced Maduro. That was an illegitimate government, and the constitution is very clear. The president is going to be permanently absent. It doesn't make any sense to discuss if probably will be liberated or not. So even if at the end he's declared innocent, it will take several months, maybe years, for that legal process to conclude. So the president of Maduro is going to be absent of Venezuela for more than a year. So after July 3, according to the Constitution, an election has to be called in 30 days. It's very clear. It doesn't mean that the election is going to be done in 30 days. That's not feasible, but that's not what the Constitution pretends to say. What it says is that during those 30 days, you have to call the election for a certain date. It could be end of 2027. So after August 3rd, this is going to be a de facto regime because it's out of the Constitution. And I think the U.S. government and the regime in Venezuela have to agree to an election during 2027 in order to be sure that there is going to be a clear transition in Venezuela, because that is also another serious constraint and concern for investing in sectors like oil and electricity and gas that are long-term investment. Because if you are going to invest in green fields, it will take 5 years after you see significant amount of production. Given the condition of the infrastructure in Venezuela, even if you are going to invest in a brown field, it will take 2 or 3 years in order to see again production increases significantly. We have the case of Chevron that is going to invest in the fields that they already were producing in Venezuela and in another area that was assigned. And the chairman of Chevron recently said that probably that won't be more than 50%, let's say about 150,000 barrels he said, for about a year and a half and 2 years. And this is Chevron, that is a huge company that has been present in Venezuela for so many years, that has financial and technological muscle. You can imagine any other type of investor. So even investing in brownfield, because the infrastructure is heavily damaged. So unless there is no a medium-term outlook in those institutional change according to the Constitution and the rule of law, I am not optimistic that production in oil is going to increase. And that's very lamentable, because Venezuela has extraordinary competitive advantage in the oil sector. We all know that the oil reserves are there. They are not deep. Even the extra heavy oil is below 1 kilometer in deep in order to get a production. While if you produce even very light crude, like Brazil and Guyana, offshore in a very deep distance, that will mean that expenditures are going to be very high. So OPEC and CAPEX investment has to be significant. So, and it's very costly. That gives Venezuela significant advantage, and I have done that exercise with the team that is working with me on that area, that the break-even price for Venezuela in the extra heavy oil sector is, when you take into account the fiscal regime, not this fiscal regime undefined in the law, but the fiscal regime that we are going to propose. And I'm just going to mention that it's going to be very objective, very precise, and very clear. And it cannot be changed during your contract period. If the country decides to change any tax law or the royalty in the hydrocarbon sector law and the income tax, you are going to be protected, that we are not going to apply those changes retroactively to any project, because that has been a problem in Venezuela, and that was the main reason why the heavy oil-producing company decided to stop investing in Venezuela. So that has to be very clear. When you have a break-even point like we calculated in Venezuela, taking OPEX, CAPEX, and the fiscal regime that we are proposing is $27 per barrel for the extra heavy oil. That means that we compete in advantage in the whole Western Hemisphere or any country with any type of oil. Those calculations, I can show it whenever or whoever wants to see those numbers in details. And for that reason, we could be producing, like Francisco says, in several years, let's say 10 to 15 years, between 4 and 6 million barrels per day. That's our project, okay?
Perfect, Gustavo. I will stick with you for a couple more minutes to ask you a follow-up question, and then we will go with Mariana and Francisco to close to the event. But there's two things that are important also to refer to. One has been coming from the audience, that is the public debt, and how the debt restructuring process and how the debt with China can hurdle or can be an obstacle in restructuring Venezuelan debt. And also, I think it's important for the people listening to us, beyond oil, which other productive sectors of the country hold the greatest potential to drive the Venezuelan economic growth and job creation in the foreseeable future, in the next decade? So debt restructuring, China, and other sectors, and in 5 minutes. Thank you, Gustavo. The floor is yours again.
Okay. Let me start by talking about the debt, the external public debt of Venezuela. We have done a very good estimation, and I feel pretty confident about that estimation. But we're missing the debt with China, which is not officially published, the debt with Russia that could be on the military equipment, and the same with Iran. So really, nobody knows what is the level of debt in Venezuela. What's suspicious is that the government neither knows what is the amount of debt, being very transparent and very clear. And that's the reason why they have been no producing that information in the last almost 10 years. So in order to have a sustainable debt restructuring, and auditing of the debt has to be done. You have to audit the debt with one of those or some of the very international reputable accounting firms that will see all the contracts and calculate the accumulated interest and so on. We have done that for the information that is known, the debt on bonds, the debt on the arbitration courts, and some other bilateral and multilateral institutions, because that information is produced on the web pages of all those institutions and the arbitration courts and so on. So we have a very good accounting of that part of the debt. But we are not sure if we have debt with Russia and Iran, and even with China. That we know that still there is a debt with that country, but the information is not known. So if you do a restructuring only with one part of the debt, as some people are proposing, let's do the restructuring of the bonds because we know what is the amount of the debt and so on, and without auditing the rest of the debt and without a debt sustainability analysis, we could run the risk of, after we know the whole amount of debt and the payment conditions and so on, that even that restructured debt is not sustainable because it was done without any sustainability analysis, as it should be done with the International Monetary Fund as an international arbiter in this case, that is very respected, and they develop that methodology and so on. Otherwise, we run the risk of after 2-3 years, we have to say again, like it passed with Greece, with Argentina, and with Ecuador, that the restructured debt has to be restructured again. And I'm not sure if all debt holders are willing to take that risk. This is for me, personally, it's a serious concern. Okay?
Thank you, Gustavo. Thank you very much. And now, going to Mariana. Mariana, we have an arsenal of questions that I'm going to throw at you. One is regarding the Chinese joint ventures in Venezuela, and if they remain active, and if done, how the China debt is being repaid without that access to the oil production. Regarding also, or related also to China, if you envision that China could import more Venezuelan oil again at some point. And then two more questions regarding production and transparency. One is that if all the barrels are right now going to the US, and what is happening with the non-US companies that had CPP contracts signed with PDVSA, and if how that is working right now. And the last one, and sorry for having so much, but they are all related. If the lack of transparency is a big hurdle to attract investment, how the current oil trade control by the U.S. Can be useful for that, and if reporting that publicly can help to surpass that obstacle and to decrease the resistance. The floor is yours, Maria. I'm having problems to get you, Mariana. I think we have a connection issue.
And unfortunately, we're not having. Okay.
If you want, I will move to Francisco while you log out and log on again to see if the connection gets better.
Okay.
Okay. Francisco, going back with you while Mariana comes back. There's one question that has come also in the conversation, and that Gustavo laid out, and you also laid out in the first intervention, that is about the governance reforms that you consider essential to ensure that the energy sector stops being used as a political tool, or stops being discretionary, and becomes more a driver of national development. And also, another question that is coming from the audience is if you think that this discretion can help for some adaptation during the recovery phase, or to the contrary, the discretionary nature of the fiscal terms are an obstacle for the process to keep progressing in the way that is meant to be. So, Francisco, the floor is yours.
Sure. So I think in order to have the growth and the investment that we need, mostly from the private sector, because of the issues that were mentioned by Gustavo in terms of the size of the debt and the capabilities that the national company today has, this is mostly a private sector investment. You need first to make even the current law much more less discretionary, much more transparent in the way it sort of defines the right for investors. The mechanisms to assign contracts cannot be the ones that we are seeing now, what are completely opaque, with no process. Like every other country in the region does either bidding rounds or other mechanisms that are very transparent in terms of, what are the fields that are going to be allocated. This is public information. What does a company need to do to make an offer for a field? The fiscal regime, as the question says, yes, the fiscal regime, and Gustavo also mentioned this, has to be flexible, of course, to adapt to the different profitability of different projects, not only because of different types of oil, different types of stages. Some are brownfields, some are greenfields, et cetera, et cetera. So we all are, I think, in agreement with the flexibility of the regime. The previous regime was terrible in which it has only one, government take. Having said that, the problem is not the flexibility. The problem is the lack of transparency and the lack of how is this going to be defined for these different types of profitability. And Gustavo and his team have been working on a proposal that ties this to the R factor, which is a profitability measure. There are other elements that you can add. For example, some element that adjusts with the price of oil. It could be the income tax. It could be this tax to hydrocarbon tax. There are different ideas, but the key is that it has to be very transparent. And by the way, I understand that in the short run, maybe you don't think that this is expedient, but in the long run, you need to do bidding rounds, like serious, transparent bidding rounds. Also, that requires building an institutionality. Again, this might take time, but having an independent regulatory agency like Colombia, Mexico, and Brazil have, I think is a very important element, because in the long run, you need a stronger state, not a weaker state, a stronger state in terms of the capacity to regulate the sector in a very predictable and credible way. And you need, of course, much more participation by the private sector. Then you need, of course, other elements in terms of management of the oil wealth. And finally, let me just say that the role of the national oil company is something that we have to also redefine. I don't think in the short term you can, privatize PDVSA as it is, because it's an absolute mess. It doesn't have, it hasn't been reporting accounting. There has been so much corruption, etc. But eventually you could have a more, limited national oil company that is cleaned up, that is restructured, and that could be listed in the market, like they did in Colombia, Argentina, and Brazil. And makes it much more accountable, etc. So there are different models, but the key is having a clear framework with credibility, with strong government capacities in terms of collecting the taxes, but guaranteeing investors their long-term rights. And just one comment. Recently, Argentina had approved a law called the RIGI law that is for long-term investments and provides all these types of guarantees. I think this is something that Venezuela might study, as what Gustavo said in terms of using the bilateral investment treaties as an expedient way to solve this dispute. Thank you.
No, thank you, Francisco. Short follow-up before going to Mariana to close to the conversation. Do you believe that using the U.S. Justice system and arbitration system is a good way to help during this moment in which we don't have strong institutions in Venezuela? The question is coming from the audience, that if you think that the oversight from the U.S. and the U.S. institutions could help in the recovery, or that it's needed to also build the national institutions at the same pace in order to have both working in tandem?
I think you have to work in parallel, right? Sort of a transitional regime and a sort of a longer term regime. I do think that this guarantee, because of what Venezuela has sadly done over the last 25 years in terms of destroy the reputation and the credibility of the government in regulating the sector. I have a paper with some colleagues that you can find in our webpage that tells you about all the things that these companies endure, and it's crazy, absolutely crazy, the amount of permanent reneging on the conditions, right? So there is a lot of trust to be built. There is a lot of institution building. In the meantime, it will help to have arbitration in the U.S. Perhaps if possible, some elements of using U.S. law to set some of these issues. In the long term, of course, a country has to have a sovereign, well-designed system to sort of deal with these things. But so far, the only one of the drafts that the government has circulated includes the possibility of arbitration in the Paris Chamber of Commerce. with Venezuelan law. I think there are different models as we have been discussing, but I think in the longer term we need to build this institutionality. But in the short term, I do understand that some of these that we could take advantage of the fact that, for example, some of the revenue is most or all of the revenue is going through the U.S. That companies, in order to get licenses, have to be domiciled in the U.S. and that contracts according to OFAC will also have to be registered in the US. So these kinds of things can help provide some credibility in the short term while we build the institutionality and the legal framework for the future.
Thank you, Francisco. And now, Mariana, to close today's conversation, I will just repeat the questions super quickly to you.
I got it.
You got it, yeah. I will add one more just because you are going to be the last one talking today, and it's added to all the China and the joint ventures and the US part on the questions. Just one more, that is if you believe that international investors are primarily waiting for a regulatory framework or changes in Venezuela, or are mainly waiting for deep political changes in Venezuela before committing to big investments. That is the last one that I wanted to add. And the floor is yours, and thanks.
All right, because it is not about China, I'm going to start by the last one. And I think the answer is yes. But also we got to take into account there are different levels of participation possible in Venezuela. So, for example, we will have to differentiate between companies trying to get into long-term projects as PDVSA partners, so, for example, through joint ventures. I would expect those companies to wait for a better environment to invest big time in Venezuela, for sure, because we're not talking about bananas here. We're talking about billions of dollars needed for each one of those projects. So nobody's going to go to Venezuela and invest money, even for expansions, if we don't have what Gustavo and Francisco already described. For example, legal certainty. We don't have a contract model right now, so we don't even have the contract model terms. We don't have regulation after the approval of the hydrocarbon law that is quite necessary. And now they're talking about resolutions also needed for example, for the taxation. So the entire legal framework is not ready. We cannot talk, and the companies cannot do a complete an assessment of whether to invest in Venezuela or not if they don't have all of the parameters, all of the terms clear. And those are not clear right now. So that's the answer to that question. And going to China. China is still CNPC and PetroChina, which are the two companies that are PDVSA partners. They are still the Petrocino-Venza project is still the largest producer in the Orinoco Belt. People forget about that. And I have seen people talking about Chevron here and Chevron there, but Chevron is not the largest participant in the Orinoco Belt. It is China, even though the project right now is not being operated by the Chinese directly because they are nowhere to be found since the January capture of Maduro. Pretty much they have very minimum teams operating in Venezuela physically, but of course they do have their stake. Their stakes in the projects is there, and they are still a participant in those projects, even though they're not physically in the Orinoco Belt, like operating the Orinoco Belt. So Petrocino-Venza, for example, in the month of May, last month, was the largest producer in the Orinoco Belt and was producing about 170,000 barrels per day of Merey crude. And Merey crude is the most coveted crude type in Venezuela. Everybody wants to get Merey because other crude types have quality problems that PDVSA is still dealing with. So it is quite important not only because of the volume point of view, but also because of the quality point of view. So we cannot just extract China from the whole play in Venezuela. And again, China was the first destination of Venezuela's crude before the capture of Maduro, and it has the capacity to refine more than 500,000 barrels per day of Venezuelan heavy crude and fuel oil, which is necessary to have in the mix at some point. But right now, which is another question that people were making, the first destination of Venezuelan crude is the United States. In the month of May, they took about half of the whole volume of exports with almost 600,000 barrels per day. And this is the consequence of having the traders, Trafigura, Vitol, and other smaller traders participating in the mix, because, of course, for them it's easier to sell those barrels that previously were sold directly by PDVSA to, by example, U.S. refiners. Now they're pretty much taking over that commercialization role. And this is very important because this is a de facto situation, right? PDVSA has not awarded a contract for these companies to be the commercialization arm of PDVSA. And from my particular point of view, trading is the subject that I brought about the most. It is necessary to make that transparent as well. PDVSA would have to award a contract for commercialization and to have competition, proper competition by companies trying to get into the mix and trying to export Venezuela's barrels, because the way it is right now is pretty chaotic. There's no way to know how the cargoes are being allocated to each one of these companies. The joint ventures partners also want to have their own barrels delivered to themselves for sale. So, by example, we can see Chevron exporting individually the barrels they're producing in the Orinoco Vale and elsewhere. But other joint venture partners want to do the same, and they have not been allowed to. So, by example, a good example of that is the Europeans. Repsol, Maurel and Prom, ENI have been trying very hard to get direct contracts with PDVSA to take their own barrels from their own joint ventures and commercialize those barrels for their refineries, by example, in Europe. By example, Repsol has said that they have quite large capacity for processing Venezuelan barrels, and so far they have not been allocated directly any crude cargoes. They are working with the traders, which means they are not being repaid the debt they have accumulated in Venezuela, which is quite important as well. So there's an inequality of situations in Venezuela with the partners. Not all of them are being treated equally. And again, that goes to the transparency issue we were talking about before. The system for allocating those cargoes is not clear. The way these companies are paying is not clear. It is the Department of Energy in the United States, the one that is saying, by example, how much they are selling and which are the prices, which is crazy to think. But that's the way things are happening right now. And the most recent information they have said is that they are selling about $2 to $3 billion per month of Venezuelan crude and fuel oil, which is consistent with the volumes we are seeing exported tanker by tanker. But then, what's that money going to, and how it's being administrated? Because the Delcy Rodriguez government is supposed to be requesting approval for budget needs, and the U.S. is supposed to be approving those budget needs and then freeing the resources accordingly. We don't know how is that happening. We do know, by example, that some projects and things that have been marked as priority, as Gustavo said, by example, power was supposed to receive the first allocations from those budgets, but they haven't. So it is very important to underline that there's no transparency in the resources. There hasn't been transparency in the assignations of the budget requirements and how the funds are being administrated. It's supposed to be audited. So at some point, of course, those audit reports would have to be released for people to see how are they administrating the budget.
Thank you, Mariana. A quick follow-up just to close. The last question we had from the audience is if you think that the quick increase in the output and the regime surpassing what was the first goal that they said is related with the conflict in the Middle East and the rest of the geopolitical situations.
Definitely, there's an effect, of course, of demand for Venezuelan crude that was not expected at the beginning. And of course, there's also a demand that is coming from the fact that Venezuela already had supply contracts with some countries and were not fulfilling them. And now those countries, let's put the example of Spain or Italy, are saying, okay, I can refine this Venezuelan heavy oil because I have the refining capacity for those. So, by example, Repsol has recently said that they're doing quite well compared to peers because they got access to Venezuelan crude. And that is okay from the volumetric point of view. But again, Repsol is not discounting the debt it has accumulated in Venezuela through those cargoes, because the cargoes are being sold by the traders. So in the ideal world, Repsol would have to be able to manage its own barrels that is producing in its own joint ventures, and being able to decide whether to export those barrels to its own refineries. That would be the ideal world, but that's not how it's happening right now.
Okay, well, thank you, Mariana, and thanks, Gustavo and Francisco, for this deep dive conversation. I will say this is the first time that we have so many questions from the audience, and I feel that we need like another 2 more hours to untangle all of this. But I will summarize that Venezuela has a lot of potential. Venezuela has all the conditions. Venezuela has all the capacity and the professional knowledge, but there's a huge need for political change, for reforms, for transparency, and also to end the discretionary regimes that can scare or make the investment to be really risky. To all the people following us, we are going to share a summary about this, and I will commit Gustavo, Francisco, Mariana to do a follow-up conversation on this, because I'm sure that there's going to be a lot of interest. Thank you for your time. Thank you for being here, and thanks for explaining Venezuela. That is something that requires a specific degree of understanding and knowledge that is beyond the academic credentials. So thank you, everyone, and we will keep talking. Bye-bye.
Thanks.
Thank you, Mariana. Thank you, Francisco. Thank you, Gustavo.